new jobs data has put the fear of God back into the markets with the belief that, hey, maybe we are going into a recession. We're going to talk about all of that and more on today's show. As Kevin said earlier, it is going to be biblical when this shit hits the fan, and the shit is close to hitting the fan. As we get going, please hit that like button, subscribe to our channel. Nothing we say on this show is financial advice. We are not financial advisors. We are a couple of guys who love following the markets, do a bit of dabbling in investing ourselves, but do your own research, please, when making any buying or selling decisions. We had kind of the amuse-bouche before the big report on Friday, Kev. We had the ADP jobs data today. It showed that less private sector jobs were added compared to what was expected, which headline is good, but it's always got to look below the headline. We also saw a lot of people are still quitting their jobs, which kind of tells the Fed that okay, people still have enough money to survive what is going on right now. We can still keep cranking it on up. We also had, I listened to this morning an interview with Cleveland Fed President Mester. She did about a 10, 15-minute interview on Bloomberg. Listen to that one. And once again, I think people are overthinking what the Fed's going to do. She was, again, very transparent with what the expectation is, what the goal is, and what they're going to do. It was like Powell was in her ear telling her exactly what to say. So it was an interesting start to the day. How are you viewing the markets as we hit the final hour of the trading day?
Yeah, it's been really interesting. This is, I think, the third day for the NASDAQ going down. So that's been something I've been really keeping an eye on. Has the dirty bubble finally popped? I don't know. I think it seems like we're getting closer to a point where people are not really believing in the markets, or maybe there's a lot more uncertainty than there was, a week or so after the banking crisis. But I think people are definitely starting to see that there's signs of recession coming if we're not one in already. I think we are in one. But I'm very excited. I think the news today from ADP about how many jobs were added in the month of March, super interesting, and I'm just super excited for Friday till we get the important data, and then obviously the Fed's going to speak. Bullard is, so a lot of good stuff on the horizon. This week is just all about jobs, employment, unemployment, and I'm all for it.
I feel like Bullard is our guy right now because he's like the lone Fed president who's like, we need to take this shit to 6%. Everyone else is like, yeah, we're good at 5.1. Bullard's like, you people are idiots. We got to keep going. He just does not. He gives zero shits about any of it. I think it's awesome. He's like my spirit animal right now. I love that guy. So that's been interesting to watch. I talked about before the show. We've seen a lot of money from retail traders entering bank positions right now. B of A has been a huge one. Charles Schwab has been another favorite of retail traders at this point. To me, it goes to show me that retail traders are less fearful than in the past. Maybe they're getting a little bit sharper. And I say this as a retail trader. But at the same time, I like the idea of buying when others are fearful. But I don't think we've hit max fear yet. I think they should have waited a little bit longer. I do believe, people smarter than me, that we're going to see more contagion. We're going to see the banking crisis get worse. So I think that the opportunity... I think buying bank stocks when we're at peak fear is a good idea, but I think that they went too early.
Yeah, I couldn't agree more. Again, we knew that there was going to be a bounce at some point, and buy maybe at the bottom of the bounce if you're going to do a swing trade real quick. Obviously, I don't think that's necessarily a bad idea if you know what you're doing. Again, if you're just retail and you're just hoping that the banks are going to bounce back and everything's all good and we're just going to move into the bull market, you might need to do a little bit more research. But I think that what we're seeing with the bank stocks and the banking crisis, especially in the markets, it might be the dip that keeps on dipping, and that's unfortunate because you're never going to know when to buy in or when it's going to be max fear. But again, I think a lot of this still has to play out. They got kind of saved by the Fed and the U.S. government with I forget what that plan was, the BT something. The Bank Terminal Funding Program, BTFP.
Okay, yeah.
Yeah, they kind of got saved with that. But again, let's not forget that that's not quantitative easing. That's, pretty much them having to pay those loans back at a higher price later on. So they can't loan that money out to retail. So, we're not out of the woods yet. That's just something to keep in mind. But yeah.
Yeah, our own Peter Schiff here, Ace, talking about gold. And looking at the chart for gold, it is at a 13-month high. So that is it's been quite the run up for gold over the last. I mean, it hit a double bottom in early November, and it's just been on a nice tear ever since then. So good on you, Ace. We know you got all that copper wire. You are just hoarding right now. So I know you sold some of it. I hope it goes absolutely crazy and you're able to retire early thanks to all that copper. So I think that's the most we've talked about metals on this show. So we've hit our quota for the week. Good for us. Pat on the back. We still see oil hovering in this 80, like right around $80, just over it. At some point, we're going to really feel the squeeze from OPEC. It has been like winter is, we're in spring now. Even here in Colorado, it has been a very mild winter. So I don't think we've really seen the effects of, on the natural gas side of things as well. So we're coming up, we hit spring break. We're in this, like on the oil front, we're in this pause right now where like school is still in for most of the country. People haven't started their summer vacations. Europeans haven't started their summer vacations. It's coming. And, you brought up earlier on, like talking about shorting some airlines. Maybe that's a good idea. Maybe looking at some of these other businesses that rely on seasonal travel for revenue is a good option as well. And maybe we wait a little bit on that until the Q2, Q3 results come out. But I think it's going to be interesting to see what happens with oil in the coming months as people vacation and how other stocks are impacted as well.
Yeah, definitely. Oil is just so tricky right now because it's this OPEC, cut came at possibly the worst time for the Fed because look, we're not going to have another meeting till May. You said yesterday, and I agree, it makes a valid point that maybe this data isn't affected by, OPEC cutting. Maybe this is a summer thing. And again, we were talking about how we're going into summer. And this thing is going to play out and as long as it needs to, and it's going to, when we least expect it, it's possibly going to happen. And we do know that when we go into the summer months, volumes drop in both traditional markets and crypto. And a lot of people just kind of like tune out. And that's a dangerous place to be because maybe smart money closes a lot of their positions. Maybe dumb money doesn't. That's the part where you get caught with your pants down. I'm not saying that the market's going to collapse in the summer, but if we look back at 2008, that's when it began its major descent from like July into August. Got a little bounce in August. September.
I was just going to say, I wouldn't be shocked if we started, if the July, after Memorial Day, the July inflation data for the month of June that we get, I think the reports that come out in July, August, September could be pretty bad with this OPEC cut if we see oil push back over $4 a gallon nationally, which it wouldn't surprise me if that happened at all. We've dipped so far into the strategic reserves for the U.S. I don't know how much more they can really do. So I think we heard about it, but we haven't, we're not going to see the effects for a while.
Nope.
And when we do, it could get very ugly. And it's going to be at a point where I think most people, and I think this is a Fed's plan, ideally is they would raise one more time in May and then they would pause. Then they have a meeting in June. Let me pull it up real quick as I'm talking, but I believe they still have 6 more meetings this year. Nice. So they're going to have, they have a meeting May 3rd. Then I think they want to pause at the June one, which they don't meet again until July 26th. I think we'll get some bad inflation data in July. Then they're off for August altogether. I think that I think it's setting up for later this year to be a disaster and us really start to feel the effects of the production cut of 1 million barrels a day.
Are we literally replaying 2008 right now? We lost Bear Stearns in March of 2008. We lost Credit Suisse in March of 2023. I don't know. We're at that 5% rate, which we also were at in 2008. We're going into the summer months. We saw a little bit of a rally into the summer months last time in 2008 too, because everyone thought everything was fine after Bear Stearns was acquired.
That fucking ice maker, man. We got to do something about that ice maker. We got to do something about the ice maker.
If we get to 200 subs, I will fuck up that ice maker in the background. I'll go with a low.
You can go full Office Space with a baseball bat like he does with the fax machine and just beat the shit out of that ice maker.
You got it. It couldn't be a better description.
The ice maker is the third host of the show now, so it's really good. We're this is good. This is how content gets made. We develop our channel. This is our shtick, is this fucking ice maker. Anyway, back to oil, back to how that's going to impact things. We could be seeing 2008 all over again. It's definitely possible. Now what we have to do is let's go back and reverse engineer how we want to play the market heading into into the back half of this year. Are we going to see another housing crisis? Are we going to see on the commercial real estate side of things? I don't know if there's really how we would play that at all. Can you short the commercial real estate market? I don't know. I don't think so. But yeah, I think that's kind of the game plan, is figuring out how we can, take what's going to happen from previous recessions, like we talked about on a previous episode, and make some money off of that.
Yeah, I'm not too sure how you would short, commercial real estate. Probably look at some of these companies, that have huge listings and stuff like that. I think there's definitely a bunch of commercial real estate.
Or, well, I guess shorting the banks that give out a lot of those loans would probably be your way to do it as well. Like finding the banks that do the most commercial real estate loans and then shorting the fuck out of that is probably your play.
That wouldn't be a bad idea either, I don't think. Yeah, there's again, I don't think we're far over from any of these motherfuckers going under. So it's really anyone's game at this point who decides to go under. But yeah, I think that there is money to be made in commercial real estate shorting it. I'm not going to say which stocks or anything, but I know there's Simon Property Group. That's one of the bigger ones. And I didn't know who that was for a second. It's Riggs, though. Hilarious. Yeah. But yeah. The one thing that's really interesting for me, though, going back to the OPEC thing, is I saw an article, I think it was from Barron's, talking about the case for a weaker dollar. And this made me really think about what we talked about yesterday, too. Say the dollar continues to go down, but oil goes up. So now the value of the US dollar is, decreasing as the price of goods is increasing. That's inflationary right there. That's just asking for, another spike. And I don't care if unemployment's going down. If we start seeing energy, which has always been a huge part of, the CPI data, the PCE, well, maybe it isn't anymore. They'll take that out and say, energy means nothing. But or they'll revise it to be like, oh yeah, actually, energy's up 25% from the March CPI. But point is, I think that we are going to see a good amount of we could see a pretty good spike, and that's dangerous. Obviously, the dollar is going to go up as rate hikes go up, because it just shows you that the circulation of the dollar is slowing down. People aren't spending as much. That's why we saw a massive pump when we started pumping in those 75 basis point hikes back all the way up into September. But the dollar's been coming down since. We've had a couple of 50s and 25s. Maybe OPEC just screws us later in the year, and they have to either spike it up, or the entire market collapses, risk assets, just the entire narrative falls under. It could happen. Again, anything could happen at this point. It just seems like we're at an inflection point of it's going to happen from day to day. So that's why money never sleeps, and neither should you. Just got to be watching the charts 24/7.
All right. Well, let's. We also do not give health advice, because you should be sleeping. This is, once again, it's patience right now. The people who move these markets are more patient than your retail investor, and they will wait until the time is right, and then they're going to give them the old dipsy-do, knock them across the chest, send them down a peg, and that's when shit gets ugly. I've seen people saying that this is the start of a bear market. I will respectfully disagree with this being the start of a bull market. The bear is not over yet. It was hibernating, but it's coming back in the summertime, and it's going to claw the shit out of some of you.
Yeah, if a bear shits in the woods, they're going to do it when you're least expecting it. And it's going to be all over your family's picnic. So that's what I anticipate coming your way.
Okay. I mean, wise words right there. There's not a whole lot coming. We get Bullard speaking tomorrow at 10 a.m. Eastern. I cannot wait to listen to that. And we have a few more job reports. This has been the week of jobs. We got initial jobless claims, continuing jobless claims tomorrow, and then the big guy on Friday with the unemployment report. So I think that's everything kind of on the macro side. Do you want to dive into any charts? Or I know you also said that you wanted to discuss, were those your points on US dollar, or did you have more to discuss?
No, I just wanted to go into that because again, I'm super bullish on the dollar. We'll jump into the DXY still, but you know, to play devil's advocate, maybe the dollar just decreases from here. Either way, it's not good for the markets. Either it goes up and risk assets fall, or it goes down and they have to raise rate hikes, which eventually risk assets will fall. That's just something we didn't bring up yesterday, but I'd love to go into the DXY because today it decided to pump a little bit and it found a little bit of support. And that stupid trend line that I made yesterday, it bounced right off of it. That was just a
Who would
signal.
have thunk?
Who would have thunk? Exactly. So let's jump into the DXY. I think I got oil on the charts right now. I don't. We see oil on the daily. It's hitting its head on the 200 EMA, but wouldn't be surprised if this on the daily we get this red line going above the 200, and that would be like a golden cross, and that would absolutely be able to take us to that $100 barrel mark. So just something to keep an eye on. We broke from this, but if we get this red 50 EMA to cross this 200 up here, that's usually a pretty good sign, short term at least, that we're gonna push to the upside. But we're talking about the dollar because it's pumped, and we're gonna go down here. And I drew this little line right here yesterday on the show. I was like, maybe it just it holds right here. And currently it bounced right off it and shot up. Went up to the 102.035, which is around the level of support that we were hoping it would hold. Became resistance. We're trading below it right now. However, we're extremely oversold on the daily for the DXY. And this is the thing with the DXY. Pretty much all time frames except for the weekly. Weekly, we have a little bit more room to the downside. I anticipate that being oversold by Friday's close. So 2 more days wouldn't be I would hope we'd be oversold because then we can move a little bit sideways. But I don't think the dollar is dead yet. There's too much in the technical that I'm still not bullish, but I still believe that there is going to be another good move to the upside. This might be just a little bit of a fake out, and we also see tons of news just absolutely crushing the dollar and making it seem like it's worthless. Maybe in few years when we were in hyperinflation. But for right now, I think the dollar is going to come back. We're going to see some strong move to the upside over the next few months. And that could absolutely play out into like that September, like August, September area that we were talking about, because this is the monthly and we've been oversold since January. Maybe we start to make our move to the upside in like June, July, and then we're all the way up here. And then the market decides to dump. But that's just something I'm seeing on the macro, on the daily. I think right now we got plenty of room on the upside, the daily stochastic RSI, to push us up above that 10. What is that? That blue line? I always forget it. 102.035. If we get above that, definitely have some room to find this as support. And if we zoom out on the daily, start making our way up to the upside and we make higher lows potentially, then, well, that's your double bottom. And that's a pretty good sign that the dollar is going to make a recovery bounce to the upside. So definitely something to keep in mind. And again, think macro with this one. A lot of news is really hurting this, but I think in time, the dollar is going to come back pretty strong. Now,
I think part of it is, real quick, part of it is also, I think too many people are out over their skis because now it seems like there's an expectation that the Fed is going to cut this year. And as soon as that gets priced out, which it is going to get priced out because they are not going to be cutting this year, that has been like, once again, it's just painfully obvious for anyone who listens to whether it's Powell or Bullard, or any of these Fed presidents saying that like they're probably not cutting this year. There's data dependent, blah, blah, blah. I think that the markets are going to have some pain in them because we're going to see that those people are going to be like, oh shit, we were wrong. We got to price an elevated interest rate for longer into our equation here.
Yeah, I couldn't agree more. And I sent out this tweet earlier too. A few days ago, I said, I think they know. And today, I think they know. I think that banks and all these huge investors realize, okay, game's over. They're just setting themselves up for positioning to the downside over these next few months. And I think that retail is going to get caught with their pants down. Again, that's a lot of people saying that, the dollar is not going to be strong. I want to make sure that my wealth is secure. I see gold and Bitcoin going up. I see Ethereum pumping overnight. I'm going to put my money in these risk assets, because I don't want to miss out. Everything else seems like it's going down. I don't know. It just seems like the macro long-term play here could be, the big boys are ready to drop everything on retail, and retail is just absolutely ignorant to the fact that this is going to be pretty bad. Like, I don't know, even sometimes when I just go to the store or anything like that, life just seems very like normal. Like people probably aren't even worrying about this stuff, but I'm constantly just like, I don't know, man, the world's going to end tomorrow. But it just seems like a lot of people aren't expecting something bad to happen, and that's usually when something bad happens. So that's just something to keep an eye on. But the dollar, once again, I do think is going to make a bounce back if we start to see some of that capitulation begin to happen. Let's go to.
I think it's inevitable.
I agree.
It is inevitable.
Sound like Thanos over there. Sorry.
Sometimes I think he was right. Anyway, that's a whole conversation for a different time.
Exactly. But let's look at Bitcoin, because obviously Bitcoin is the one that we've been watching for a while. It's the one we look at because the market tends to follow Bitcoin. We see dominance did drop below 47%, as we talked about before the show. But right now, I want to talk about this because we did get a golden cross on the daily back here in February, and it pushed to the upside, right? And we're finding resistance at the top of the supply zone. However, my biggest fear is that people are going way too short right here because we're finding resistance. And unfortunately, the market doesn't like to go the way of the masses. There's more money to be made screwing over 51% of all traders instead of screwing over 49%. Doesn't mean that it can't do both. The market would love to do both, and just, everyone is poor except for the one guy who's just, CZ or, Sam Bankman-Fried or Caroline. But I just see a lot of resistance right here, and I see a lot of people shorting, but the price is still staying pretty strong. I think that we're probably getting to a contraction point. Let me see. Do I have the Bollinger Bands up? No, we'll look at the Bollinger Bands tomorrow, but I think that we're getting to a point where we're going to see a quick move to the upside, and that might be our local top. I'm eyeing like 30K to like 32K, 33K. And again, my main thing, so like probably like right around here. Because if we look back, let's see. We got these bounces off here, bounce there. We got tons of resistance on this line right here at 32,319, and then 30K. We're finding it's like these little ranges that are up in here. I wouldn't be surprised if we get like a wick, or a few days that we trade up there before the market absolutely tanks. It just seems like right now a lot of people are expecting the market to go down, and that's dangerous. Even if I pull up here, I'll pull up CoinGlass, because CoinGlass, the shorts are pretty interesting over the past 24 hours. And this is the Bitcoin longs versus shorts. This is the 24 hours. We're at 49.85% long versus 50.15 short. So maybe not 100%. It was a little bit more on the side of shorts earlier. But if we go down the line, we could see that, 50, 51%. Few exchanges have more longs than shorts. But for the most part, we're seeing the masses in red. And this could potentially change at any point. We're seeing, what is this? Yeah, we're obviously seeing more shorts at the moment. I think that number has to go up. More people have to open up short positions for us to go to that 30 to 33K range. And I don't think it's impossible. And I think that we're getting really close to a point where we're just going to see, these liquidations pile up. If we look at Bitcoin liquidations in the past 24 hours, we could see, past 24 hours, we have a total of 29 million. Pretty low. It's pretty low liquidations across the board. The only one that was really impressive was Doge the other day with 23, because when's Doge ever important? Obviously, whenever Elon needs exit liquidity. But point I'm seeing is that we are extremely low. I would like to see 24-hour rights. I don't know, maybe 200, 300 million if we're going to do liquidations right. It just seems to be the way when true liquidations happen. That's when you get those higher numbers. And then I want to look at the funding rates right now. So these are people who are going long versus short. We have negative funding right now in Bitcoin. That tells me that there is slowly building positions that have shorts, and that's going to allow for a good squeeze. It's not the same across all. Like obviously Ethereum is pretty maxed out right now. It's got positive funding. Does that mean it can go up higher? Sure, a little bit, but I think we're actually topping out pretty close to ETH. And that might be because I think the upgrade's coming next week, where they're unlocking all that staked ETH for people who have had it there for a while.
Yeah, that's a week from today. We also have seen ETH outperform Bitcoin, over the last couple of days. I wonder if we see that for a little while longer leading up to the release, and does that turn into a little bit of a cycle for alts to take a leg up? This is kind of going in that cycle now. I'm not saying it's going to happen for long, but as bearish as I am, I wouldn't be surprised to see another month or two where the market stays bullish before things start to turn in, June, July.
I'm totally cool with that because I want to top short from the top down. And if this market wants to give me a better position to get in, I am absolutely happy to take it. It's all about opportunity in this game. And right now, we're not seeing 100% negative funding across the board, which tells me that there's going to be a short squeeze across for everything. But I do think that certain coins will be picked up with others. I think that the Ethereum, the upgrade and the release of all the staked coins, that might be buy the rumor, sell the news event. It doesn't have to be, but I think we've seen a really good move for Ethereum. And once all of this gets unlocked, who's to say people who weren't staking are people who are smart money that just decide, what, I know this is going to go a lot lower. Let me just dump my position here, and then I'll buy back in a little bit lower. Again, I think most people who are staking are probably people who have a good amount of ETH that was currently staked. So that's going to be really interesting to see how that plays out. But I'm seeing some negative funding, so I'm not saying that I'm bearish 100% in the short term. I think that we are going to see some good price action over the next few weeks. And that could be, obviously taken down as the dollar starts to pump or whenever it decides to flip. But I think that there's too many shorts. There's not enough. While there is too many shorts, there's not enough shorts for there to be a fast pump to the upside where that liquidity is built up. They want that stuff to be sitting for all the people who think they're smarter than the market just to wipe them out and then go right down and wipe out everyone who goes long above 30K. So that's my thoughts on Bitcoin and a lot of the other alts. It's just going to be really interesting to see how this plays out. I don't have too much on anything else. I think that's pretty much it on the crypto side. A lot of stuff is going to be interesting more as we see more unemployment and jobs data this week. And then obviously when Bullard speaks, that we'll talk a little bit about crypto, how that's going to be affected.
Yeah. I mean, right here from Ace, ETH was like 600-700 when staking started. So exactly. I wouldn't be shocked if people are like, okay, let me take some of what I've earned, swap it over to cash. They've seen the volatility. It was around the time of, the Celsius Voyager collapse last year. We actually saw staked ETH like take a big hit because there were so many people that were concerned that those staked ETH positions were going to have to be sold early. So I think there was that fear that I remember and other people do too. So I wouldn't be shocked if we saw that number come down. Yeah. Bullard speaking tomorrow, just be prepared to see some quick moves to the downside there because that guy is going to come out so hawkish. Like it's going to be crazy. And the markets move. I saw it today when they had the Cleveland Fed president up there speaking. Mester, she would say some things, and in real time, you would just see. It's fun to kind of watch that with TradingView because you would just see the market moving. It was in the pre-market too, and we're going to see the same thing tomorrow with Bullard. He speaks at 10 a.m. Eastern, so the markets will be open. It's inevitable. It's going to happen. I think that he's going to come out very, very, very bearish. So don't be surprised if we see a little bit of movement down there, which oftentimes is a nice little scalp trade too if you want to make it.
Absolutely. Hopefully not tomorrow, but after we get a little pump, send us to the Stone Age. I'm waiting for it.
Kev's waiting. I'm waiting. I got plenty of patience here. I'm not freaking out. We're gonna have a great opportunity to accumulate some high quality assets at low prices. So I think that's gonna wrap it up for today. We'll be back tomorrow, same time, same place, kind of giving the update on the latest round of jobs data, how the market's looking heading into the big report on Friday. We'll come up with something else to discuss as well. I think as we get closer to what we believe is going to be the bear market, I think it'd be fun to kind of put together some different how we would design a portfolio, with X amount of money heading into this cycle. So that's going to be something that we can discuss, Kevin and I. If you have any other things you want us to talk about, drop it in the comments. Hit us in a DM on Twitter. We got both of our Twitter handles here under our name. So reach out to us. We'd love to get any feedback about the show. Once again, hit that like button, subscribe to our channel, share us far and wide. We greatly appreciate it. Riggs, Ace, thank you for being here live with us today. Even though your comment, Riggs, does hurt my feelings, but you know what? That's fine. Kevin, any final thoughts before we head out?
Keep making that ice.
There we go, baby. Keep making that ice. Keep stacking that cheddar. We'll be back tomorrow. Appreciate you guys being here, and we are out.
Take care, everyone.